How you doing, traders? Welcome to Investing Confidential. The market's trying to rally, but it's going to be very, very difficult. The news just keeps coming out worse than expected. And like I said, it is October 1st, and we are entering earnings season in a week. And earnings season is not going to be very good. We may have discounted some of the bad news, but I highly doubt it. Every day we're seeing landmines. So if you're a trader, I would say either be in cash or be very, very quick and do day trading because the landmines are coming this earnings season. Let's start off looking at what the journal's saying today, talking about some consumer spending data. It popped. A lot of the data actually popped in August, just temporarily. This is not going to continue. The trend is lower for consumer confidence. The trend is lower for consumer purchasing. So whether it's computers, whether it's cars, whether it's a lot of these things that were talked about having scarcity because of chips. I think I showed yesterday, there's a lot of chips, okay? A lot of chip inventory out there. Computers, car manufacturers, they're manufacturing like crazy, and they're dumping a lot of product on the market. So if you're a buyer of cars, computers, appliances, wait a couple months. You're going to get big bargains because they're going to be trying to give these things away, or at least at big discounts. So this computer spending blip, not to be seen as a positive. Any kind of positive data going forward is to be sold. Okay, so that's that. Eurozone inflation. I mean, we're going to talk about this again. This is the problem. They are way behind us. They're 4 or 5 months behind us. They're 10 plus in terms of their inflation. Germany, UK, it doesn't matter what country. France, they're in big trouble. They've got huge energy problems coming. So if the inflation is 10% now, what's it going to be 3 or 4 months from now when we get into winter? This is a disaster. And again, Europe as a bulk is the largest economy in the world, right? If you put all the countries together, and Europe is basically in stagflation. So this is something that we certainly should be worried about, especially with technology companies, car companies, any company that sells overseas, which is really most of the big companies in the Dow Jones. They're going to have some real issues. Again, third quarter was bad. So has the first quarter. So was the second quarter. We've had some rallies. Certainly in the third quarter, we had a significant rally. But this is a bear market, folks. You have some of the biggest rallies ever recorded in the stock market were during bear markets, and this will continue into the fourth quarter. We're going to get some good news on inflation, as I mentioned, but it's going to be short lasting, and it's not going to continue. I think that the Fed, even though they indicated, they're going to raise only by 50, I think they're going to raise even more. They have to. They're so far behind the curve, and I think they really want to squash the economy before they reverse. And by the way, they do want to reverse. Just a couple of other things here. This comment here by the Exxon CEO saying limiting fuel exports. I think what energy companies are realizing is that the White House has depleted the strategic oil reserve. I mean, literally depleted it. 2 days ago, the White House said they're going to stop buying oil again. This is a disaster. You can't really ship our oil industry over to Europe and other places to help them because we have problems here, and we have definitely depleted our reserves. So that's a real big issue that no one's talking about. And here another big problem along with Europe is China. I mean, China's got major issues. We'll talk about this again when we go to the Financial Times. But China has got serious issues economically. Here we talked about the export. China's been an export economy. They continue to try to export, but this boom is over. And they're certainly having major issues within their economy, and a number of reasons. It's obviously the zero COVID policy is a disaster. But remember, as an export country, China needs the U.S., the Europe, and other parts of Asia to grow fast. Well, that's the opposite is happening. Outside of India, nowhere else in the world is growing. In fact, it's the opposite. People are going into recession. So China's got some serious issues because they have relied on exports. They've tried to build up their service economy. They tried to build up their internal with technology, and the government, as we know, has squashed a lot of the technology companies. And then the major engine for growth, which we've talked about in a video a couple of videos ago, is the real estate industry, which actually has completely imploded. So there's what the journal's saying. Again, Financial Times, Eurozone inflation hitting a record 10%, energy prices soaring. Again, we talked about already, Europe is a mess, an absolute mess, and there isn't really anything they can do to get out of this mess in the very short term. They're going to try to throw a lot of money at it, but it's not going to work. I mean, as you saw here, our government has tried to throw money. They were able to artificially bring down gasoline prices. But if you notice, folks, in the local news, gasoline prices are going up again. Why? Because the Biden administration has depleted this artificial move in depleting the strategic oil reserve. And now that they have no gasoline left to throw out there, or oil, they're going to start, the oil prices are going up again. So this was artificial, and it's going to create serious issues again down the road for inflation and for the economy in general. Something I talked about yesterday, as you could see here, all the losses that were done by the UK, they erased those losses, they cleaned everything back, but this is short term. Intervention doesn't work, especially the first couple of interventions governments do. They never work, and this one is not going to work. So you're going to see eventually the sterling continue to lose. It's going to go below parity, which is 1-to-1 with the dollar. It'll be 0.9, 0.97, as the euro is, because there is nothing stopping the U.S. dollar right now. Absolutely nothing. Finally here, just going on Bloomberg really quick, just to again, the big news here in the U.S. is Apple was yesterday. Here's a headline: Apple's tech supply chain shows difficulty of dumping in China. Look, China is a disaster in terms of economy. Apple manufactures, or they actually produce a lot of stuff in China, not manufacture but assemble. So their supply chain has problems, and they can't get away from China, right? They'd love to get away from China, but they can't. It's not that easy after a decade or so of relying totally on China for this assembly, and trying to move that assembly out logistic wise is really a nightmare. So Apple's going to continue to have problems. This move down in Apple has been done without Apple saying much. And when Apple does say, when they do report their earnings, they're going to have to take down their guidance, okay? And we all know what happens when companies lower their guidance. There's going to be a whoosh in Apple stock lower, if that's the case. Again, we don't know, but if that's the case. And again, if you look at a PE, the talking heads, the analysts will tell you, oh, Apple's cheap on a PE basis. No. Remember, price earnings, okay? The price is one thing, but the earnings. Without the earnings, there's no cheapness. And Apple is going to predictively have some tough quarters ahead, which will in turn affect the entire tech industry. So at the end of the day, it's going to be a rough time in the markets. There will be some rallies. Some of them will maybe tradable rallies, but as we saw last few days, you get these big rallies, and then boom, you're going to get turned over again. Nobody knows how the market's going to close, but as professionals do, what I would do is watch the market to the open to about 10:30 a.m. After that, turn your TV off, turn your computers off, have your stops in, and then go back again around 3 o'clock, 3:30, and watch the close. The professionals trade in the morning, but most of them really do all of their trading in the close. The volume on the marketplace is usually the last 5 minutes and at the close. The market they call market on close. In the middle, there's no volume. The market is incredibly illiquid. That's why you see wild moves during the day. The markets are no longer liquid as they used to be. Neither are the bond markets. But at the end of the day, which is where the professionals trade, that's where you're going to see most of the volume. And if you need to get something done, or you want to see where possibly a direction is for the next day, watch the close of the market. Anyway, that's it. Again, I am off to Europe, and we will speak soon. Happy trading.